Crypto Hotep here with another investing video. We are on week 77 of the Family Portfolio and Dividends Tracker. Thank you guys for your views and your subscriptions here. Much appreciated. Before we go to week 77, we do go back and look at week 76. But before we do, if this is your first time watching the video, go to week number 1. So go to my channel, go to week number 1. And then that gives you the whole breakdown and the methodology between what we're doing here. I'm trying to cut down on the amount of time I use for these intros. So just go to week number 1. You'll see why I'm doing it. And basically, we're just documenting the whole investment journey with my family here. Every family member of mine has a portfolio, a sub-portfolio with his or her own stock choosings. And then every week we go through this portfolio and we discuss news events, balances, dividend activity, the whole gamut. And basically these videos are for my own edification first and foremost. If you enjoy them, great. Like I said, support the channel, like, subscribe, comment. But really, I'm making these videos so hopefully my family can see them, maybe learn from them whenever I'm gone, and hopefully they'll be beneficial as well. With that being said, guys, we will jump right in. But before we do, I want to go through two things that is affecting the markets currently, and that is the government shutdown, because there's big news articles on the government shutdown. It's kind of like it's in your face with what's going on. So that's all you see, because that's all they want you to see right now is the government shutdown. So this article by NBC, I'll put the link in the description. It kind of gives you a brief synopsis on what the government shutdown means and what it can actually do. So the main premise is the federal workers aren't getting paid during this shutdown, but members of Congress and President Trump, they are still receiving their paychecks because their pay is constitutionally protected. Okay. Another thing is, how does it affect the military? Well, operations will still continue to be funded regardless of the shutdown, but pay for military and civilian workers will be delayed until a funding deal can be reached. Okay? How is air travel affected? Very similarly to military, air services will continue, but 13,000 air traffic controllers will work through the shutdown, meaning they won't get paid until that government deal is funded as well. So security checks, will those still go out? Yep. Those still will go out and they'll continue to go out. However, again, going back to that workforce, there could be Social Security Administration could face a furloughed workforce as well. So fewer workers could mean that processing of those Social Security applications, i.e. those payments, those could be delayed, but that would just be based on that workforce. Okay. So this is a good article so you can get a quick synopsis on what's going on. This government shutdown actually did the opposite of what people thought it would do for the markets, and you'll see that in a quick second here. Next thing to put on your radar is President Trump is considering providing stimmy checks again in the amount of $1,000 to $2,000 using tariff revenue that the U.S. has collected. Last time we did the stimmy checks was around 2020, ironically under President Trump again, and that basically boosted the market as well. It also did increase inflation, so it's a give and take here, where you increase the inflation even more. But if you are a trader or an investor, you kind of love this, because now that money printer is back on booming, so you're injecting capital into the markets, and usually with that, the number goes up. So assets go through the roof usually when that happens, and this could be that green light for that as well. Okay, so with week 77, we do go back to week 76 here. Week 76 saw us with a balance of $3,199.17 with a money rate of return of 14.39%, really good. And a dividends earned of $22.84 and a market gain of $305.56. So let's see, week 77, what do we have going on here? So week 77 for the money rate of return for the family portfolio of 15.79%. Our account balance is $3,244.11. And we have now $23.49 in dividends earned year to date. with a market gain of $338.91. So what has been going on? So between this week and last week, right here, we've had a couple dividend payments. We had Waste Management. We had a big dividend payout from Pepsi, over $1. This is our biggest dividend payment yet, over $1 in dividends. And I know this isn't a lot to many, but if you've seen the trajectory of the dividends, you kind of appreciate where we've come from. And so what I'll do is, I can probably show you better than I can tell you here. So let's do this. Let's go to the activity. And let's just go to dividends. Let's go to symbol. And then we're just going to go to Pepsi. Okay? Because so we can see here. So if you're looking at these dividends, these are all the dividends in the family portfolio we've ever received, or my wife has ever received for Pepsi, because she's the only one that holds Pepsi. So we started receiving dividends in June 2024, and we received 13 cents. Then we received dividend in September, 14 cents. Then we received dividend in January 2025, we got a quarter. Then 43 cents. Then 78 cents, and now we have $1.03. And this is how you should be looking at it. You should be looking at it just increasing your position in the company, and then those dividends will follow. Okay? So let's go ahead and clear this out here. Sorry, I just had to say that because I know some of these dividend payments can be very small, but they've increased over time. So Coca-Cola, 34 cents, and then Domino's Pizza, 18 cents. And then this is that $1.03 buy right here that we bought more Pepsi. Okay. So we did have an added payment, an added deposit come in today, or this week, I should say, of $10. So what did we buy? We had 3 buys. We bought some Costco, we bought some Microsoft, and then we bought some more Pepsi. Bought some more Pepsi here. And that got dispersed to everybody, bottom to top. And let's see what we have here. So at the bottom, we have our middle. Our middle has $390.22. Let's go into the portfolio here. And so we have a 5.75% year-to-date return, dividends earned of $2.62, and a market gain of $12.64. So let's see what the culprits are. So again, Target is the Achilles heel of the portfolio, down over 27% year-to-date. Yikes, that's not good. However, again, Target's having a rough year. Right, so it had some DEI practices that a lot of people didn't like with Target, and that did play on its stock price. There also has been lackluster earnings with Target as well. Okay, so I think again, where Target is on the price spectrum, we're nearing the bottom for Target. We're gonna still stay strong with Target here. Amazon's cheap right now. Watch out for Amazon. Costco's down, but it's not going to be down long. Tesla, now we're up 33% in Tesla, up 71% in Google. Starbucks still down, and Starbucks is doing a lot. Were in the news this past week just for the cuts that they're going to be doing to employees, and also the closing of several Starbucks stores as well. So they're doing some things to hopefully revive the brand and also reorganize the company. Sony's still up 26%. All in all, I'm not too mad at this portfolio. So we will look at my wife's. So my wife's portfolio again. One of the best portfolio performances I've ever seen. Year to date, 54.68%. Dividends earned of $2.42. Market gain of $116.49. Again, with a balance of over $400 at $448.16. So Celsius up over 135%. Pepsi, that we just spoke about, up over 3.5% with Pepsi. Google up over 56%, and then Tesla now, the darling of the portfolio, up over 45, almost 46% in Tesla. Guys, if you've been following the channel, We've been down on Tesla for months. We've been in the red double digits, 20, 30%. And you see what happens when you stay strong. You keep buying in the hard times, and eventually those companies turn around for the good. Okay, let's go to our youngest. Our youngest has a balance of $448.93, very close to my wife. Money weighted rate of return of 17.94%. Dividends earned of $1.56 with a market gain of $50.85. Very similar picture here. Tesla up over 30%. Apple has found some footing here, and now we have an upward trajectory in Apple here, up over 16% in Apple. Apple's had very good sales with their iPhone 17. So this has boosted the stock price for Apple as well. Starbucks, very similar, down over 3.5%. Sony, though, up over 30%. And then Costco, barely in the green, though, but we really don't worry about Costco too much here. Okay, let's go to our oldest. Our oldest has a balance of $970, very impressive. Money weighted rate of return of 7.78%. And then market gain of $56.16. Dividends earned of $4.72. So Apple up over 10% in Apple. Tesla, again, not at the 30% plus, but still up year to date double digits at 16%. McDonald's up almost 5%, and then Costco, again, treading water here, down almost 2% year to date. Not too bad here. Okay. And last but not least, let's go to my portfolio. My portfolio has a balance of $986.53, money weighted rate of return of 15.64%. Dividends earned $12.17, and a market gain of $102.77. So the biggest outliers here have been finance and consumer staples here. So let's go into finance here. Moody has been down. So Moody has been down 7% in Moody. Visa is up over only 2% here. Not too worried about Moody's here with where they're at with the price with Moody's. Consumer staples have taken a hit as well. Consumer staples, Costco is just bringing it down just a little bit, down over 5%, almost 5% with Costco. But Lowe's up over 20% in Lowe's year to date. Now, again, if you're looking, this is your first time watching video and you're seeing this drastic chart going down here, I consolidated my portfolio because I once held over 45 stocks just from my portfolio, and I consolidated that down to 12 stocks separated by these sectors here. Okay, but we have restaurants and food still in the green. Pharmaceuticals, AbbVie has been on a tear as of late. So AbbVie is up over 24% year to date. Love to see that. And as we all know, my darling of the portfolio is technology. Technology is up over 41%. And that is Microsoft and Google. Kind of the tandem here. You can't get better than this here. Okay. Let's see what we have here. And let's see. And we have real estate at 9%. And then industrials and energy. And this is basically Cintas and waste management. Despite them being in the negative here, the money weighted rate of return year to date, this sector is up to about 2.25. It's just going to look a little funky just because I was doing all that rebalancing of my portfolio. All in all, though, my portfolio is doing pretty good. I'm knocking on the door of $1,000 here, and so is our oldest as well. So very exciting news for the portfolio. And if this is your first time watching this video, this is where we were at the beginning of the year. So December 31st, we were at 1671. This is where we were same time last year. We were at $917. But we stayed true and we kept depositing, let the market work, and this is what happened. So again, guys, that's week 77 of the Family Portfolio and Dividends Tracker. If this video helped at all, feel free to like, subscribe, comment. Let me know what you think, guys. It helps me out, helps the channel as always. Thank you, and happy investing.